Okay, guys, welcome back to the channel. And today we got the payroll data. So the NFPs were today at 8:30 a.m. Eastern Standard Time. That is when the unemployment rate comes out and how many jobs were created in the month of July. So you can see right here that the market went down a ton. So the SPY was about 415 right before the report, and in 1 5-minute bar went down just about $5 a share. So this is why if you're trading in the pre-market and you don't know when these things are happening, then you can really get in a lot of trouble. So if you are trading pre-market, take your trade off before the report, and then after the report comes back out, then you can reassess the market, reassess the trade, digest the numbers, and go from there. So today I'm up $90, whatever. It's a small green day, but managing risk during a day like this, managing risk on a Friday, which has not treated me well, and managing risk the day before I go on vacation is a very big deal. So I'm going to show you guys what the numbers look like and why the market did what it did. And the thinking that goes behind it. So this is on our breaking news bot on our Discord. So we'll just look at the numbers. Right here, US unemployment rate, the actual 3.5%, forecast was 3.6%. So that is better than expected. And what the Fed wants is for this unemployment rate to actually go up. So this kind of scared the market, and that's why we came really far down, because a strong labor market needs to be a little weakened during an intense period of inflation, and that's why the Fed is tightening. So then we go over to the US labor force participation. Actual 62.1%. The forecast was for 62.2%. This is also not good for the market. We need to see more of the labor coming back into the labor force. That helps with wages. You don't want a wage price spiral. That's when there's so many jobs open and just not enough participation. So you have to pay more money to get somebody's labor. And what companies have to do to keep up with that and to keep their margins is they have to raise their prices to the consumer, which makes inflation even worse. So that's not good for the market, and that will be the Fed wanting to be even more hawkish. Now, for the payrolls, 471,000 jobs. The forecast was for 230,000. That is absolutely ridiculous. Right here, the non-farm payroll, all in all, was 528,000. The forecast was for 250,000. So, once again, showing the tightness of the labor market. This is very much looked at by the Fed. They see a very strong labor market, and the thoughts are, okay, they're going to have to raise rates even higher than expected. So in September, now the market is pricing in 75 basis points, because this cannot look like this if we want inflation to come on down. That's their thinking. So what happened was, and you can see is obviously the market went down. So when it comes down like this, and what we're watching right here is we're watching a little bit of a rebound. Now the market's only been open about 23 minutes. So anything can happen with the whole day. But the one thing I have to say is a very strong labor market like that and low unemployment, that takes recession and the talk of recession totally out of the near term. You cannot have a recession with a labor market that incredibly strong, that many people working, the unemployment rate going down. That does not happen in a recession. So the market this morning was at our key level here. I'll show you on the SPY, just about touched it to the penny down here. So we hit lows of 409.24, and we've rallied up since. Like I said, anything can happen from here, but I don't care about that. I wanted to come in here and make a little profit and then shut it down. So I'm fine with that. So I hope that you guys enjoyed the video. Like I said, small green day today, and that's the way I'm going to keep it. Hit the thumbs up. If you're new, subscribe. I'll see you back on the next one. Take care, guys.